Everyone, as we mentioned, we're tracking shares of Google and after hours trading moving higher by about 3% right now. For that, we want to bring in Jared Blikre with the earnings. Jared.
That's right. We hit 2,900 and change. You can see it's right there on your screen, up 5% right now. I'll get to the numbers in a second. I just want to announce that Alphabet has pre-approved and declared a 20-for-1 stock split. So that is going to shave the price. You'd have to divide it by 10. That'd get you down to 300, and it's going to be a $150 stock. Very similar to Apple. So you got to wonder what's next. Dow, another index? Very interesting to think about. But here are the fourth quarter results. Revenue coming at $75.33 billion. That is up 32% year over year, crushed the estimate of $71.8 billion by over $3 billion. Services revenue up to $69.4 billion, up 31% year over year. And that is a beat by $3 billion almost of the $66.64 billion that the street was expecting. Cloud revenue, another small win there, $5.54 billion. Estimate was for $5.42 billion, but that is up 45% year over year. And then other bets. This is kind of the research arm, not looking to make a lot of money here, but they did make 181 million. Estimate was for higher by 209.6 million. EPS came in at $30.69 versus the estimate of $27.35, so beating them by over $3. Operating income, $21.89 billion, up 40% year over year, a little bit higher than the estimate of $21.6 billion. And Google Cloud operating loss, that was $890 million. The estimated loss was $820.9 million, so a little bit wider than expected. And then services operating income beat the street, coming in at $25.99 billion. Overall operating margin coming in at 29% versus the estimate of 28.8%, so just edging out the street bet right there. And then capital expenditures, a little bit lower than estimated, $6.38 billion versus the estimate of $7.42 billion. So just looking at the headline number, huge beat on revenue, huge beat on EPS, and they are doing that 20-for-1 stock split. It's going to send the price right down to just a little bit less than $150. So really interesting to think about the implications for that, maybe addition to an index, or maybe simply to appeal to retail traders a little bit more, because that has been the theme over the last year. Guys?
Absolutely, Jared. And I did want to ask a follow on that stock split, because, of course, this isn't the first tech company we've seen in the past couple of years to implement a move like this. What do you think investors should be keeping in mind with this move? Like you said, potentially appealing to the retail investor here by bringing down that per share price anyway. What do you think traders should be keeping in mind with this move?
I think whether it's just to gear it up towards retail traders and make it a little bit more available. Of course, with Robinhood, you can buy fractional shares along with some other brokers, but that's not universal. So it seems like a pivot to me, and I wouldn't be surprised to see a few other companies do this. If we remember what happened with Apple way back in the day, and I think it was GE, they got switched out in the Dow for. They announced a stock split just a month or two prior to being admitted to the Dow. And I don't want to get ahead of ourselves. I'm not saying that's going to happen, but you got to wonder. It seems like it's in the cards at least.